welcome everybody to Sunday wrap up and outlook. Hope everybody's having a great weekend. This is 50 pips, 18th/05/2014. Again, I'm not making any trade calls or recommendations. Everybody's responsible for their own stuff. The fact that you're listening to this means you've read, you understand, you accept all the disclosures on the website, on the blog, understanding that we're just performing some technical analysis for educational purposes only. Okay, so what to look for going into this week? Again, there's nothing huge in terms of data. I mean, we've got BUBA President Biden speaking on Monday, and we do have some monetary policy stuff out of Australia, out of Japan during the week. We got that CPI out of the UK, and some, but it's nothing really huge. I mean, I think Thursday is going to be potentially an interesting day because we got all the PMIs coming out of Europe too, so that's clearly going to be interesting, and a bunch of new home sales, retail sales coming out of the States. So clearly we're going into a week after we've had some volatility. So the big question is, are the moves that started to take place last week going to have legs or not, right? So just look into the charts and get a feeling for what to expect. I'm going to try and keep this short and simple. Now, on the equity side, what we discussed is we said that it looked to us like equities still were holding a bid tone, and we felt that we had to fail from higher levels, right? So you see this YM, so the Dow pressed higher, and then we got a little reversal. But again, it seems like everybody's getting overly bearish. Keep in mind that clearly the tone seems more bearish than last week's, but as long as we don't start to break these series of higher lows, the market is still catching a bid. Furthermore, do not forget, I'd like to draw your attention to the fact that we're still in broad choppy ranges at highs, right? So it's really not not close to calling for the end of the world yet, right? Something which is interesting is, again, also ES, we were looking, after we were basing at those 1850s, we're looking for press to new highs towards those 1900s for possibilities and opportunities to get short off failures at those levels for a little retracement, and that indeed play out quite nicely. But keep in mind, as we said, the broader ranges, we have it highlighted here, 1900, 1850, 1800, and we're still hovering around, right, at these highs. So clearly there've been very nice opportunities. You can see here when we press higher, we felt we had to fail from higher level, we printed higher levels, that 1900 was defended, and bam, we got a roll. But supports are still holding, so keep in mind that we really need to get the bears have a chance to cause some damage and to keep some pressure on going into this week, but it's far from being an uber bearish tone, right? There's still an underlying bid tone. Now the difference is that NASDAQ and the Russell are, which have been leading to a certain extent, have been have a slightly heavier feel, right? Even NASDAQ, you see we had this reversal back down nice into support, but it caught a bid, and you see here also higher low, higher low, higher low, higher low. So clearly the picture is slightly different, and you might want to continue looking at the NASDAQ and Russell for clues. But as long as we don't break all these series of higher lows, we could clearly see ourselves back at highs, and maybe we need another failure from highs, and that's going to be the right one. We still don't know. We'll have to wait and see. And in terms of something to look at maybe for the week, something that could be interesting was to keep an eye on the Russell. If you look at this is the weekly. On the Russell, you got the 50, 100, and 200, and you see how we're finding some sort of a base there at the 50 on the weekly. So it might be interesting to see if we close above or below on the 50 this week. So that's something that I'll clearly be looking at. Okay. Now, right here, what's going on some of the other things I just want to look at quickly. Gold, pretty much not a lot. We're still hovering around that 1300 mark, and we said really it's just a bit of a snooze fest unless we really see something, a proper move start, either with equities breaking to new highs or us starting to see some more panic selling to the downside. For now, it's still bid supporting all the way down into those 80s and 70s, and it's offers into those 1300, 1310s. So as long as we don't get a move outside this range, it's still much to do about nothing. Snooze fest. The moving average is flat, not a lot of interest. We'll have to see what happens here. In terms of gold, crude also, because a lot of people have been asking about crude, no real change. You know, that hold of that base, we were looking for a move back into 102s, 103s, and a breakout to possibly a much bigger move back into the 10s, 12, 13, etc. And that's still in place. So right now it still looks that as long as it's holding above that 200 and it tries to get some traction to the upside, you know, maybe that 100 could cross and it'll give us a bit more momentum, and that's going to allow us to take a stab at those highs or that descending trend line. So that's clearly the focus. In terms of, you know, CAD and Kiwi, really no interest at all. Not a lot's been going on. If you're looking at Aussie, you see basically we're still hovering around that 93.30. We've discussed that's a pivotal level, and that continues to be a pivotal level, right? So as long as we don't see some Momo and some flows coming around at that level to take us either right back down into that 200 DMA or right back up into those highs, it's just much to do about nothing. It's just looking for direction. Unless we get a strong break here, it's holding support, right? And unless we get a strong break either side, it's just a bit of a sideways chop. Not too dissimilar to the equities, right? And, you know, big question is, you know, is the dollar going to catch a bid or not? In terms of the yen pairs, you know, EURJPY, we'd been highlighting all these failures in this mid-range, right, pointing towards an attempt to try and take out the downside. And we said as long as we keep on getting these daily closes inside the range, it's much to do about nothing. When it'll start to get interesting is when we get the daily closes outside the blue shaded area, right? And a close outside here, we'd expect it to take a stab into the 143.60s. A close below to the downside, we'd expect it to take a stab to the 139s, right? Daily close below, there we go, bam, right into the 139.00. So here it gets interesting. Going into the week, above or below the 139, we could see some stop hunting below this level into Monday trade, early Monday trade. But really look at this as the first base support. If we break and hold below, we could easily accelerate back down. But I would suspect this level is going to find bids. And really, this is going to be the bull bear line going into the week on Monday. And if it starts to hold, then it could clearly be a support for the week or resistance for the week if it lets go. I think this is a very, very key level going into trading. And in terms of the yen, so USDJPY, not dissimilar. We're back into this support that's been holding for a long time, clearly tested. A level is a level until it breaks, and right now it's still holding. So keep an eye on how we open tonight, how this trades. If we break to the downside, keep in mind that there's still a lot of support further down, right? Going in all the way into that 170s, but clearly these 105s are 101.50s are really, really important. If you keep in mind, you know, BOJ talk, you know, what they've been doing, you know, official bids in the market, etc. I would expect that even if we get some kind of a stop hunt and some flash move to the downside, we'd still find bids here. I wouldn't expect to see a sustained move lower, so I'd still expect one of these levels to the downside to act as support. But keep in mind that there may be a lot of stops layered here, and there may be some wheeling and dealing even from the part of official names to try and get some volatility, maybe play with better prices. So it's going to be interesting to see how this plays out. But clearly, as far as we're concerned, we're looking at this more as strong support rather than heavy into support. So it looks like the support has some legs here, right? So let's see what happens going into trade this week. And then what do we got? Euro and cable we haven't done. So what's going on cable? So cable, we had this move right back down, and we discussed this important support, right? This was a key area. Once we broke up and we came back down, this was really gave us a lot of conviction for the new break at highs. And on the move down, we said this whole area is going to be really important, because not only is the 50 back of this most recent leg up, but it proved as very, very strong support here. And what we saw here after an aggressive move, bam, the 50 back got bought to the pit. So buyers coming in exactly where we'd expect them to come in, and bam, reversal. Very strong daily candle here, and it's holding a good bid. Okay, so going into this kind of action, what we said and what we were discussing is that if the sellers are going to come in strong, they're going to have to cap this and hold it below these 68s. And we talked about on Twitter, we kept on going, it's all about 68.00 to 68.20s. As long as the bears can hold it below, we could see some aggressive moves back to the downside to try and take out those lows. If we start to move above, then we expect this to try and coil back into the 68.50s, and that's going to be the pivotal line. So you see what's happened. We've come back into this previous support acting as resistance. Sellers tried to cap. Sellers tried to cap. Bam, we're above, and now this is acting as support. So as long going into the week early, look at what happens around the 68.00s, right? If we hold below the 68.00s, then the market could clearly try and take a stab to the downside and try and put some pressure on. But really, unless it takes out those lows into those 67.30s, it's still supported, right? And as long as it holds above this area going into the week, we would expect price to continue to try and rotate to the upside, to continue to try and take a stab back into the 68.50s. And if it breaks above, you know, this could just be a very big swing low for a move right back up to challenge those 170s and possibly higher, okay? What's going on euro as far as euro is concerned? We've just been looking at a massive chop range, okay? And the way we look at ranges is you sell failures at highs, you buy failures at lows. So far, this is what's happening. We moved back up into the upper side of the range. We had failures at highs. What do we see? What do we say when high range fails? We expect the market to try and take out the opposite side. So we had a very aggressive move all the way back down into the opposite side of the range. Very nice resistance, confluence with this 200 DMA coming up here. Bottom end of the range, expect this to hold. Failure to take out these lows, then we expect this to catch a bid and we expect this to be supported here, okay? So going into the week, look at the shorts. If this is the start of a bigger move, correction back down into the 135s, 134s, look for the shorts to try and keep pressure on. So what would we expect? We would expect this to try and catch a bid, move all the way into the 37.70s, maybe into 38s. This is pretty much going to be in line with the 50 back of this move down, which is coming in at pretty much 38.10s, right? So the way we would look at this is, especially if this move is very, very strong, the shorts to try and front run that 50 back. So we'd expect the market to catch a little bounce, and indeed if the shorts are out in full force, they're going to come in around those 37.70s into those 38s, and that's where they're going to come in and pile the pressure back on to that break lower and to test lower levels, okay? However, going into the week, if we move up into those 37.70s and we shoot up knife through butter through 38s, 38.20s, then we'd expect this to try and go all the way right back up into the top part of the range. So that's really the bull bear line for the week. You can call it 38 if you want to call it easy, but pretty much we call it, you know, it's those 38.10s into those 37.70s, which is going to be the key. So that's what we'd be focusing on, unless, similar to cable, unless we take these lows out quick, we'd expect to catch a little bit of a bounce here. At the moment, it's still a range play. That's the way we're looking at it. That's the way we're going to play it, okay? So that's pretty much it. I hope everybody's having an excellent weekend. I hope everybody has a great rest of the weekend for those who still have some weekend left. Again, if you like the content, don't be shy about sharing it, retweeting it, liking it, whatever you want to do with it to spread the love. Again, see you guys for London Open. Thanks a lot for listening. Have an awesome one. Take care. Bye-bye, guys.